Hello everyone, good morning, good evening, good afternoon from wherever you are. So this is just going to be a conversation away from charts. And someone posed a question and asked, actually it was a discussion in a certain traders forum or group where they were just having discussions, and they asked this question. The question was, is Forex trading a better long-term wealth building vehicle than real estate or stocks in emerging markets like Kenya? So I'll put a screenshot on the video during editing and you can read it for yourself. There's a bunch of other questions, but I'll not delve into that. I'll just talk about the first one. Again, I read, is Forex trading a better long-term wealth building vehicle than real estate or stocks in emerging markets like Kenya? Now I'll talk about Forex trading and wealth building. First of all, let me just put out a disclaimer. Whatever I'm going to say is not financial advice. I'm not a financial expert, but what I'm going to say is probably something that would make sense to you because it makes sense to me or to any other person. And if it makes sense to you, you can think about it and maybe put it into practice or give it a try. Now, how do I see Forex trading? Is it a wealth building vehicle? Is it a long-term wealth building vehicle? My answer to that would be yes and no. But before we even get to that level where we're talking about Forex trading as a long-term wealth building vehicle, can we first talk about how we can take the first step towards financial freedom? And in most cases you will hear this from financial advisors that the first step towards financial freedom is building an emergency fund, right? And in most cases they say you should pull together money that is enough for around 6 months or worth of your monthly expenditure. Like your monthly expenditure around 6 months, and that is going to be your emergency fund. That means if your monthly expenditure is around 50,000, it should be times sorry, I'll just undo that. It should be times 6, and that makes it 300,000. So this becomes your emergency fund, and you are going to save it. You can save it in a bank, in interest generating assets or portfolios, things like that. But I have a different approach to this. Instead of having 6 months worth of your monthly expenditure, why don't you have 100 months worth of your monthly expenditure? Let me change the color. So 100 months of worth of your monthly expenditure. I know this is going to sound like a very tall order. Like, now where do you get 100 months worth of your monthly expenditure? I don't know, it's pretty difficult, especially in places like third world countries or developing nations like Kenya, where the minimum wage is pretty low. It's very small, and it is going to be difficult for someone to build such a huge amount of money. But if you're someone who is into forex trading, I know you're smart enough. You are smart enough to know what you can do to pull such a figure together. And it is even more advantageous to someone who is working a decent job, maybe earns 100,000 a month, compared to someone who is a student. If you're working, you're at an advantage. You can actually pull this together, but it will need you to take very serious sacrifices, to make very serious sacrifices for you to pull such a figure if you are working, right? But it is just the first step towards my financial freedom. I'm talking about financial freedom. It is the first step. It is not the ultimate step towards financial freedom, but it is the first step. So why am I saying 100 months worth of your monthly expenditure? And this is my reasoning. I'll pull up a new page and say, if your monthly expenditure is 50,000 Kenyan shillings, I'm talking about Kenyan shillings because I am in Kenya and I understand the Kenyan economy much better. Now, with 50,000 shillings, you're actually living a very comfortable, not a very, very comfortable life, but a decent life in a middle to low class, middle or upper class. I don't know this classes vizuri. Middle class level. Yeah. So 50,000 shillings is enough to live a comfortable life as a middle class citizen. Now, if you're building an emergency fund, you want to multiply 50,000 times 100 months, and this is going to be around 5 million Kenyan shillings. I know there are people who are capable of doing this. Now, with this 5 million Kenyan shillings, you are not putting it in a bank account. You're not doing that. That is very bad. Instead, you are putting it in investment in interest generating assets or vehicles, right? And one of the best places to put this money is in a money market fund. Now, in Kenya, money market funds perform the stability of performance is commendable. Actually, it's good. So you'll get 10% to maybe 14% for best performing money market funds. All right. So, and these are stable rates, very stable. You'll get an oscillation between 10% and 14%. Now, with this in mind, you are putting 5 million shillings in an asset generating 10% per month, per year. This is per year, not per month, per annum, right? This interest is calculated per annum, right? So if you do your mathematics really well, 5 million shillings at 10% per annum will give you 500,000 shillings per month, per year. That is 10% per year. Divide this by 12, you will get around, do we have a calculator here? Calculator. Yeah. 500,000 divided by 12. You get 41,000. Around 41,600, right? With 41,600 shillings per month, now this translates to, this 500,000 shillings per month translates to 41,600. If you invest in 14% per annum, it will translate to roughly 50,000. Let me just do that mathematics. 5 million times 14 divided by 100, 700,000 shillings. Now that figure divide by 12, you will get around 50 or 50 something. Let me see. Divide by what? 12. You get 58,000 shillings per month. You see that is close to 50,000. So with 5 million shillings in a money market fund giving you 50,000 Kenyan shillings per month, you realize you can easily quit your job and still live this lifestyle without having to ever bother anyone about needing financial help to cover basics. This covers your rent. Let me just this page is small. This page is small. So new, let me just open a new one then. So 5 million is earning you 58k per month. This money is covering your basics. That means your rent is paid, your internet is paid, your what else will you need paid? Maybe power. In Kenya we pay for power, Kenya Power, nanunua tokens. You want what else? Food covered, food and water, right? What else would you need to? Maybe you can fund a little bit of luxuries here and there. No, small luxuries. Maybe you are someone who drinks and you want to have your favorite beer, or you love eating out and you want to eat out once in a while. So 50,000 shillings, that is decent. And with 5 million shillings in a money market fund or any other similar investment vehicle, you will never have to work again to earn this money, unless something happens to that money market fund. And I don't think it will be possible, because number one, you are protected by, in Kenya we have Capital Markets Authority, the authority or the government organ that regulates all financial institutions in Kenya. In other countries they have their own, but it is impossible for such institutions to collapse because of Capital Markets Authority, and also your funds are protected and they have good reputation. Think money market funds like Saiton Money Market Fund, very good reputation, and they have, I've seen they have very stable interest rates paid out annually. So anyway, so with that in mind, you have your basics covered, and now we can now start talking about FX being a wealth building vehicle. Reason I'm talking about this is because it is very difficult for you to do forex trading solely as and you are depending on it to cover for this, because the risks covered in forex trading are very high. There are months you'll have very good winning streak, and there are months you'll have terrible losing streaks. And during those months, what are you going to do? If you are working, you have an upper advantage. If you're not working, you don't have an upper advantage. That is going to be a very messy situation. So to avoid this, the risks covered here, that's why I'm talking about how about have an investment of 5 million shillings in a money market fund. Now it will depend with your monthly expenditure. There are some people who live on 20,000 shillings per month. That is enough. You only need 2 million shillings. There are those who say 10,000 shillings is enough. My rent is maybe 3,000, 4,000 shillings per month, and I don't need more than that. Yes, 1 million shillings is enough. 2 million shillings, 3 million shillings, depending on your monthly expenditure. If you're a family person, 50,000, 80,000, 100,000, that is mathematics you will do on your own. But you are doing this so that you have a consistent source of income, whether you are working or not. And once you have this source of income, it is covering your rent, internet, power, food, waters, and other small luxuries. Then you can now start looking at FX as a way of building wealth. But is it a way of building long-term wealth? Now that is where the question is. It is not a way of building long-term wealth. Reason for this is because when you're talking about long-term wealth, we are talking about something that your sons and grandsons can inherit and live off from it, right? Live on it or survive on it or thrive on it. So that is what you're talking about, long-term wealth. This wealth is now in the form of legacy. Are you building a legacy for yourself? No, you're building a legacy for your sons, daughters, and grandsons and granddaughters, right? Something that your sons and grandsons can inherit. The Bible says that a good man leaves an inheritance up to his fourth generation. So you want to leave a legacy or an inheritance that serves up to the fourth generation of your lineage. And your sons and grandsons are not people you're going to convince to learn this thing called FX, right? It is not going to be possible. They'll grow up and want different things from what you do, right? So what you are doing is you are using FX to build legacies. Now, these legacies is not in the form of money. It is in the form of things that will generate income even after you are dead. And now at this point you're talking about real estate, right? We're talking about trust funds. Trust funds can have businesses, companies, things like that, or shares that you hold in other companies, right? And you have trust funds, you have real estate. Your sons and grandsons can depend on this or live on this, whether they are interested in FX or not, right? So that is just my idea or my thinking. Is it possible to use profits from Forex trading to invest in real estate, trust funds? It is very possible. Real estate, you can start with real estate investment fund trusts. Things like Savo is a good real estate investment trust where you own units within a real estate or within an apartment, and that company or whichever company building those apartments is the one managing it for you. You can also do buy pieces of land and build apartments on it. Now the way I look at apartments, now let me just open a new page for that and talk about apartments for a minute. The way I view apartments is not something to be obsessed over return on investment. It is something I see it as a way of income generation. Let me do what? I don't look at it as in terms of return on investment. Instead, I look at it in terms of income generation assets. This is just an acronym I've come up with. It doesn't really exist, but if it exists, well and good. So with this in mind, income generating asset, apartment or whichever piece of real estate you have, it could be commercial buildings or offices or warehouses, whichever real estate you get into, I don't look at it in terms of return on investment, where you are looking at it in terms of how long it's going to take to return my investment. If I invested 50 million shillings in building an apartment, how long is it going to take to return my 50 million shillings back? I'm not looking at it that way. Instead, I am pouring 50 million shillings into an apartment, but after the apartment is up and running, I forget about these 50 million shillings and focus on how much it is returning, it is giving me per month, right? How much income am I generating from this apartment per month, right? If it is a 10-unit apartment and I'm renting it out at 20,000 shillings, that is 200,000 shillings per month. And this is worth it, right? So this 200,000 shillings coming in per month is money I can spend, right? And this is really good. If this is money you can spend it, or you can reinvest it into other assets as well. So you're now building income generating assets, not things you look at in form of returning an investment. Now, when you look at it this way, it means you as an individual or as an investor, you are going to benefit from building this apartment. How are you going to benefit from it? You have monthly income of 200,000 shillings per month, money you can spend. Even after you die or you pass on and you go to glory, your sons can still benefit from this 200,000. Your grandsons can still benefit from this 200,000. So don't look at real estate as return on investment. Instead, look at it as income generating asset, and do this with anything else. The good thing about real estate is you can pass it down to your lineage or your generations that are coming after you. Now, what else? Someone talked about stocks in this question. Investing in stocks in emerging markets like Kenya. So let's talk about stocks now. New, don't save stocks. Now, stocks in one way or another is just similar to Forex trading. But the good thing with stocks is if you invest in well-performing companies, then you are going to earn not just dividends, but also profits from growth of your shares, right? So, but stocks in companies carries risks higher than, example, real estate. You can invest in a company, it performs really well over a few years, then after that it closes down. We have seen this happening to companies like Nakumatt, right? Nakumatt closed down. Nakumatt, Uchumi, they closed down, right? So if you had shares in that, your stocks performed really badly and you lost money. So it is not long-term wealth building, but if you do your predictions well, or you do your bets well and invest in companies that perform well over long term, then you're good to go. And which companies or areas are these that you'll want to invest in? You should buy stocks in tech companies, right? Tech companies, especially in the current age, they will do well. You have seen examples like Nvidia. Nvidia has been performing significantly well over the last 3 or 4 years. So tech companies, you can look at companies in the food industry. Food industry, because food is here to stay and people will always eat. People will always be hungry and eat. You can invest in companies in the housing or real estate industry, because people will always need housing, whether they are broke or rich, right? Invest in companies that are in the medical industry or pharmaceutical industry. People will always fall sick, so I hope that is the right spelling. Pharmaceutical industry. So people will always fall sick and they need medicine. So buy stocks in companies that are in the pharmaceutical industry. What other company can you invest in? So you can look at other companies that cover basically anything that covers basic human needs. Basic human needs. Yes. Anyway, so that is how you can leverage on stocks to build wealth, long-term wealth. Lasting companies, I've also forgotten about financial companies, but you can also look at that. Lasting companies that will last for a long time and your sons and grandsons will benefit from the profits you earn on the shares and the dividends you earn from the shares or the stocks you buy in those companies. So that is stocks. Which other thing? I've talked about real estate, I've talked about stocks. So now that becomes long-term wealth creation, and I have said long-term wealth creation is not something that just benefits you, it also benefits the people who come after you, the community that is around you. So just to go through this again, FX as wealth building vehicle. The first thing we talked about is first build an emergency fund of your monthly expenditure multiplied by 100. Expenditure times 100, but this money is in an interest generating vehicle like money market fund. Now this is an emergency fund, but you can also take care of your emergencies by having insurance. You know, medical emergencies, have medical insurance, things like that. What else? You are running a business and you might find yourself in an emergency, have a business insurance. You know, things like that. Just have insurance for your emergencies so that you don't touch on this capital that you're investing in the money market fund. And then after you've done this, your monthly expenditures are sorted even when you are not working, and maybe you are a full-time forex trader. Your forex FX is not working, maybe in those 2-3 weeks, and you're having a losing streak. Your monthly expenses are sorted. Then from there, now you can talk about investing profits from FX, building now other vehicles, other wealth generation vehicles, wealth creation vehicles, and I'm talking about real estate and what else, stocks and things like that. And you've said you can begin with rates, and yes, you can now create your own companies and register them under trust funds. Trust funds are just like real estates. Yeah, so that is my general idea. If it makes sense to you, look at it, practice it, and see if it benefits you or not. If it doesn't make sense to you, then just leave it alone and seek expert advice from financial advisors. That is it. Until next time, bye bye.